Hey everybody, hope everyone's doing well and had a good day today. In this video, I'm going to review the Emini 5-minute chart from Tuesday, June 10th, 2025. And I've been doing the PowerPoint slides. I'll add that at the end of this video, but there's just a couple things I wanted to show on TradeStation with the drawing tools. So I'm going to start the video going through the chart like this, and then I'll just put a clip of the marked up chart at the end. The first thing I want to talk about is the sell-off at the end of yesterday. And I thought that was enough selling for there to be sellers above and a second leg down. It's not a traditional leg one pullback, leg two, where, see if I can draw it. Let's see if I can remain in drawing mode. That's kind of the typical leg one pullback, leg two. For the bear case, I'll draw what this one is, where you have a leg down, a deep pullback, and then a second leg down that does not exceed the first leg, or maybe it does slightly, but you can see the shape isn't perfect, like a leg one, leg two. In this way, it's leg one, deep pullback, leg two. The reason I'm bringing all that up is because I thought the reversal at the end of yesterday was enough selling pressure for there to be sellers above and for some sort of second leg down. Probably disappointed and trapped traders above looking to sell, bulls trapped into a bad or losing trade, looking to exit, maybe at a new high, and then bears looking for a second leg down, selling as we rallied today on the open. On the open today, not a particularly strong rally on the open, and it is a bull channel. We're getting higher lows and higher highs, but where are the strong consecutive bull bars? And where are the open gaps? It's good for the bulls that we're above the moving average. There are more bull bars than bear bars, but this is a lot of trading range price action. In the first 6 or 8 bars, break out to a new high, but traders selling at a new high could have made a scalp or at least avoided a loss if they sold there. And then another breakout to a new high, 15, but at that point, 15 might have been leg 3, 1 or 1, pullback, 2, pullback, 3. We're also testing yesterday's high and the bull channel line from here. So we have a lot of resistance up here. And 15 did not get followed through. 16, 17, not perfect, but close to an II pattern. Possible tight trading range final flag after 3 or 4 legs up, and then a bear breakout, 18, second leg down likely. Also, it's a wedge, so I said 1 or 1, pullback, 2, pullback, 3. But look at the rally from 6 to bar 10. This is a 5-bar bull micro channel, no pullbacks along the way. So the odds are there were buyers below the first reversal attempt, and a second leg up is likely. So if we take the low of bar 6 to the close of bar 10, put that on the low of 11, we're also at a leg 2 measured move. There's just more resistance in this area. So bear, breakout, deep pullback, testing the apex, if that's a triangle, or the midpoint of that tight trading range during bar 20, and then finding sellers for a second leg down. Now 21, bulls get a high 3, high 1, high 2, high 3. Is this enough of a correction for this wedge? I'm not sure. Maybe not. There's maybe 15 or 17 bars in this wedge, and we'll probably get at least 10 bars sideways to down. And here we have maybe 3, 6. Here's 9 bars sideways to down. Maybe that's enough of a correction. But I said, where are the open gaps? And there's a lot of trading range price action. 1 through 6, and then here, 11 through 24. It's all sideways. So bull trend, yes, because higher highs and higher lows, but the location isn't great and the strength isn't great. There's not really open gaps or strong consecutive bull bars. And then one more thing, one of the reasons I'm on TradeStation right now is because of the higher time frames. At this point in the day, we're breaking out above yesterday's high, but the rally on the open didn't seem very strong. And if we think about the higher time frame context going into today, tight bull channel, bull breakout, deep pullback, second leg, pullback, third leg, the third leg subdivided into two pushes, or two legs of its own. And then we had a doji bar, bull breakout, doji, probably sellers above. I thought it was more likely that today would be a trading range day. And so by bar 18 or bar 20, somewhere in this area, I'm thinking today might be one of several things. The first thing I don't think it is a strong bull trend day, bull trend from the open. It might be a broad bull channel, or it might be a bear reversal day where we rally until bar 18 or bar 24, or maybe even the first half of the day and get a midday reversal, and then we get a bear breakout. But in this case, we got the surprise bar 25, and this one correcting the wedge and testing all the way below bar 81 yesterday, but not closing there. Now if we kind of zoom out a little bit, we can see it might be an expanding triangle with higher highs and lower lows. So as far as selling down here, not ideal, especially with all the buying into the close of 25. Is 25 a second leg trap? It might be, one, pullback, two, but it's enough selling that you know there are trapped traders and the upside is probably limited. That doesn't mean we can't test the high of the day. It's just that if we do get to the high of the day, there are probably sellers up here. And then this is the second leg down from this, what I was talking about earlier. Leg one, deep pullback, leg two, but now it's a double bottom. And this is all a trading range. So traders are buying low and selling high. Consecutive bull bars. I've been going through day types, and one thing I've noticed just as looking down from a higher perspective, when there's a reasonable bottom formation or a topping pattern and you get 4 consecutive bars in a micro channel, usually it looks like you can, well, basically what I'm saying is bar 28, no reason to sell, so okay to buy the close, go for a measured move. And if you just take the 3 bull bars, we got there a few bars later on bar 31 with a buy climax, also testing the bar 15 high, which was the high of the day at the time, and the bull channel line from yesterday into today. But you also could drag it down to the low of bar 25, and we reached that measured move a little bit later in the day on bar 45. I have the open of the day marked in green. On trading range days, the open of the day is usually important. It's a magnet. So here we are rallying up to bar 45, but look at the day structure. Again, is this a strong bull trend that's going to last for the remainder of the day? Probably not. And again, this is just from doing a high-level study. I haven't gone deep yet, but I've just been looking at a lot of different days, collecting days and classifying them into day types. And you just don't see strong bull trend days that start like this. So again, this is probably a reversal day or a broad bull channel. Something maybe like this, where we have a channel line above, maybe a parallel trend line below, something like that. So 45, what's happening here? 45 is breaking out above a bull channel line. We're at a measured move target. It's also 3 legs up, 1, 2, or 2, 3, or you can call it 4 legs. 45, breaking out, it's a gap. It's either a measuring gap or an exhaustion gap, but we've had 20 bars up in a bull swing on a likely trading range day, and 45 is probably an exhaustion gap. And then it had no follow through, 46. So not good for the bulls. Several legs up, probably going to get at least a couple of legs sideways down and at least test the 33 low. But if this is a trading range day, and if it is an expanding triangle, then who knows, maybe we can sell off all the way down to a new low of the day. 4-bar micro channel. This is one of those situations where there's a reasonable topping pattern. The day structure makes sense. You can probably sell the close 48 and look for a measure move down, maybe even twice the range of that breakout down here. This is 2 times that measured move. It takes you to the buy signal bar 26 high, where there are probably trapped traders from the reversal up. And we ended up getting that fairly quickly. Within maybe 6 bars, we sold off down there. We tested the open of the day again. And on the way down, expansion, pullback, range expansion, pullback, and then another breakout, 3 legs down, testing support, low in a trading range day. So probably buyers down here. And we may be looking to reverse. Nothing to buy yet, but the market might be looking to reverse back up again. II pattern, similar to over here. 3 legs up, II, small final flag, reversal, 3 legs down, testing support, II. If we break out to the downside, probably buyers below, and the upside breakout risk is real, because if it is a broad bull channel, we might be testing the trend line. Maybe it's something like that. Sideways for several bars, holding below the moving average, good for the bears, but traders are buying the low 1, 2, 3, 4, 5 consecutive bars up for the bulls. A low 1 gets bought. Bears maybe need a low 2 at the moving average, but nobody's going to sell low bar 62, 63. Now we have 4 bars up, reasonable bottom, another one of those possible buy the close situations. Go for a measured move, and then got twice that measured move again here on this one. Breakout to a new high, probably sellers at the new high. Still keeping that expanding triangle shape. We didn't quite get to the new low, but we are testing the channel line for the bulls once again. So 66, probably better to sell the close of 66 and sell at the new high, taking profits on longs. Even though it's consecutive bull bars and they're big, location is bad. It's a big 3 legs up, 1, 2, 3. We're testing the high of a trading range day, and it looks like today is a broad bull channel. We test the high of a broad bull channel, we usually find sellers. Bulls taking profits and bears scaling into shorts, selling, scaling in higher, and they're making money. Bulls never really got a strong bar, closing above all the bars to the left. 66 broke out but closed below. 67 was an inside bar, and 68 was a weak breakout bar. It did break out, but it closed below its midpoint. And then 69, one of those bars that if you're long, you just get out below a bear bar. Even though it's not a great sell setup, climactic reversals don't really need a traditional topping pattern like a wedge or a double top, or even a micro double top. They can reverse much more quickly. And so as a safeguard, maybe a default exit in a situation like this, you have a buy climax to the high of a trading range, just get out below a bear bar. So I think that's reasonable to do. 70, a bear breakout, weak close on the bar, but look at the overlap with the prior bar. Most of the bar broke out, maybe 80% of the bar 70, broke out below 69. So this is a breakout pullback on the same bar. 70 might be a sell the close bar, sell more at the breakout point, sell above the bar. But now we have 3 legs down, or 3 bars down, probably going at least a little bit lower. Maybe for a measured move of that micro channel. Breakout, pause, second leg down to the measured move. And we're also testing a breakout point, bar 64 high. So probably buyers here. And we didn't quite get there before we reversed back up. The bulls got their second leg. This is big up, big down, big confusion. This trend line break by the bears will probably get a second leg, but we're late in the day. Deep pullback, sellers at the high close. And then the bears are getting their second leg down. But it might be a triangle. Big up, big down often leads to a triangle, contracting range, lower highs and higher lows. So that was pretty much all I wanted to say about today's chart. And in the next clip, I will put the PowerPoint slide of this day marked up. But that'll just be a couple of seconds. You can pause the video if you want to look at it, but I'll wrap up the video here. So thanks again, everybody, for watching and listening, and I hope everyone has a good night. I just want to be clear that day type or day structure up here, I've been using the abbreviations that I'm using in Excel, and I'll share that at some point, but basically what this means, this is the first set of letters is day type, then subtype, and then tone. So this is a trading range day. BRC stands for broad channel, and BL stands for bull. So today, I saw today as a broad bull channel trading range day. You can also find the day type in the description of my videos, but I just wanted to clear that up. So that's going to be it. Thanks, everybody, and I hope everyone has a good night.